All right, y'all. Here's a question that I see popping up on Bitcoin Twitter right now. Should I buy MSTR and be on Team Saylor and Team Bitcoin? Or should I buy BMNR and be on Team Tom Lee and Team Ethereum? Since its first $250 million purchase of Bitcoin in August of 2020, MicroStrategy has grinded to own 3% of the entire Bitcoin network. It has a $70 billion enterprise value. It owns 687,410 Bitcoin, and it's already taken in $8 billion in investments in its preferred stocks, which offer a yield from 9.5% to 13%. On the other hand, we have BitMine Immersion Technologies, or BMNR, the Ethereum powerhouse, which now owns 3.5% of ETH supply. It's investing in moonshots like Sam Altman's WorldCoin. Oh yeah, and it's now fueling the #1 creator in the world with its recent $200 million investment in Beast Industries. They think they're going to make like $400 million a year just from their ETH position alone. The question that everybody's asking, should I back the scarcity-driven Bitcoin or the utility-packed tokenization features of ETH? Will the digital credit thesis play out, or will digital tokenization reign supreme? Today, I'm going to give you my raw, honest opinions on both strategies, no pun intended. And I'm going to pick who I think will win in the long run. This is Dante Cook with Bitcoin Simply. Let's go.
I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade.
If you guys don't know who that is none other than the price pump, price prediction king, Tom Lee, the formerly Bitcoin OG and now ETH head, the chairperson of BitMine Immersion Technologies, or BMNR if you want to look up the ticker. BMNR is the largest corporate holder of ETH in the world. They're not the largest holder of ETH in the world because, well, a lot of people got pre-mined tokens, but we're not going to go there on this episode. They own $13 billion of the programmable token, and they're making a huge bet on tokenization. Here's their thesis in a nutshell. Build the first made-in-America validator network. Invest in ETH development. Own 5% of the Ethereum network and make moonshot investments. When they first laid out this strategy, I thought owning 5% of the ETH network would take a long time. And they actually thought that it would take 5 years. But they've done it in about 7 months. Here's how their strategy stacks up to MicroStrategy's.
Which is the company's made rapid progress on getting to 5% of Ethereum. So that was our mission statement on June 30th when we launched the Ethereum Treasury, funded by our PIPE investors, 2 of which are here today. And in those ensuing 6-7 months, as you can see, we wanted to get to 6 million ETH tokens. And in 6 months, we're at 4.2 million ETH. So we're 68% of the way to 5%. We originally thought this would take 5 years, but we're 68% of the way there in 7 months. Now, thank you. Now, we have cash, $1 billion of cash on the balance sheet. So if we add the cash and said, let's buy Ethereum with the cash, we would have 4.5 million ETH tokens, which means we're 75% of the way to the alchemy of 5%. So we believe, if you believe this trajectory, BitMine should cross 5% sometime this year, assuming the 7 months continue to hold. And as you can see, we studied the blue chip standard for crypto treasury, which is MicroStrategy. And as you can see here, we have 13 billion of ETH, including cash, in roughly 7 months. At the same point, MicroStrategy had 3.4 billion of Bitcoin. In fact, we accumulated as much Ethereum as Strategy accumulated, which took them roughly 1,300 days or 4 years.
Quick question. If there's a network truly valuable, or even a stock, do you think if someone's able to acquire almost 5% of it in 6 months, that it's as valuable as what everybody thinks? Question to ponder. Now, investing in moonshots, the next part of their strategy. They just dumped $200 million into Beast Industries. Who is MrBeast? Well, he's the #1 creator in the world. Dude has over 1 billion subscribers. His content is watched more than the Super Bowl, Netflix, Disney, NBC, and Paramount. And Tom believes that his platform will be the platform of choice for Gen Z, Gen Alpha, and even millennials. The most interesting part as to what this thesis actually means and this collaboration is actually intended to do is he believes that they're going to have meaningful collaboration in the creation of products from Beast Financial, which filed a trademark application and is intending to offer insurance services, lending services, payment providing services, crypto staking, crypto rewards. Oh yeah, and banking. Do you think that people are going to switch over to moving their bank from JP Morgan Chase to banking with MrBeast? Something to feast on. It's super interesting that this is the route that Jimmy Donaldson or MrBeast took, because some think that he was actually spurred on by Michael Saylor himself. And this trademark was filed after Michael Saylor told him, just buy Bitcoin, bro. So that's one side, the BMNR side. Moonshot investing, 5% of the ETH network, digital tokenization. Now let's go to the Saylor side, the MSTR side, the OG strategy of building a digital asset corporate treasury strategy. They continue to buy Bitcoin. As a matter of fact, last week they bought 1.25 billion more Bitcoin and now own 687,410 Bitcoin, almost 3% of the entire supply of the Bitcoin network. Their stock, MSTR, has been the best performing asset over the past decade, only second to Nvidia and just ahead of Bitcoin itself, growing about 60% a year. Their strategy? Digital credit. Issue convertible notes in preferred stocks like STRC, STRF, STRD, STRK. They raise cheap capital and then they plow it into Bitcoin. It's a self-reinforcing loop. When Bitcoin appreciates, they cover their debt and they cover their obligations. Then they're able to issue more credit, 5 to 7% above the risk-free rate, yielding returns for both their shareholders in MSTR and the people that own their preferred stocks. Here's what Michael has to say about it.
I think the most exciting, there are a lot of ways you can create value from capital, but a treasury company like a Bitcoin treasury company or a digital treasury company, the most compelling thing is to create digital credit. I think the perfect product is I give you a treasury credit instrument that pays you 8% more than the risk-free rate in the currency that your expenses or your obligations come in. Then I'm giving you this massive high-yield bank account. You don't need to be able to read. You know, a 3-year-old would get value from it. An 80-year-old would get value from it. If you're in a coma, you would get value from it, right? Your unborn children will get value from it. It pretty much is the gift that keeps giving. It's such a good product. The reaction of anybody would be, well, what's the catch, right? And the catch is, well, you need a dynamo to power the dividend, and that's digital capital, Bitcoin. You need to trust the creditworthiness of the issuer. So you want to create a digital treasury company that's got very transparent credit, that's got a lot of collateral, that is understandable, that acts in a very predictable, transparent, consistent fashion over time, and that's what makes you creditworthy. And that is, I think, the digital credit.
He turned a software company making $500 million a year into a Bitcoin bank that's now worth 100 times as much as when he started in 2020. Bitcoin is a digital credit or the primary instrument. They borrow money from the largest funds, corporations, and individuals who want a greater than risk-free return. They believe Bitcoin is the ultimate collateral, and their creditworthiness is what people are investing in. Is the company credible or not? Do they have too much debt relative to their overall Bitcoin balance and assets? Here's Tom Lee's strategy, a little bit different in how they're thinking about paying out their shareholders from their staking rewards when you invest in BMNR.
Growth. The first is to maximize yield on Ethereum. Okay, so we're going to optimize the staking yield. The Caesar benchmark is 2.8. We're going to try to do better. One way we do it, at least one way that we've talked about it, is to pursue alpha strategies. Now, the entity that will execute this for us is Mosaic's Capital. But we also have an advisor, Tom DeMark of DeMark Analytics. For those who are boomers or older Gen X, Tom DeMark is iconic. He is one of the most famous market timing people. He has won so many awards. He only has 2 clients. I believe he's disclosed his, well, I don't think he's disclosed his first client, so I'm not going to name it. We are his only other client. And I showed you that slide where we bought 2.4 billion of ETH in the last 2 months. Tom DeMark's strategies, along with Mosaic's execution, probably saved us $400 million on those purchases. So think about that. We bought ETH in a way that made you guys money. So don't shake your fist at ETH when it's down. We like it when it's declining, okay? All right. But here's where I can give you some imagination. We have 13 billion of ETH. So imagine proposal 2 didn't pass and we're stuck in the water. We don't buy another dollar of ETH for the rest of the history of the company. But using the staking yield and with some optimization, that would generate 367 to 390 million a year in rewards. We have $1 billion in cash. That would generate another 35 to 40 million. The company will generate $400 to $433 million a year in pre-tax income. That's more than $1 million a day. And that's been achieved in 6 months. I think a company that goes from zero to, in 7 months, a company that can make 400 million a year, that's quite an achievement. But of course, thank you for the stockholders for getting us here. But let's think about a future scenario. Let's say that ETH's price stays at 3,000, but we get to 5% of ETH. That number rises to 542 million to 583 million. But I think ETH is grossly undervalued, okay? Let's say a proper price for ETH is 12,000, okay? And I'll explain in a later section how I get to 12. Then the annual rewards and interest jump to 2 billion to 2.2 billion, okay? That would make us one of the 20 most profitable companies in America. So, or maybe 30th most, but it's really up there, okay? So that's why if our vision is correct on Ethereum, and we're generating this level of rewards and income, you don't want us to just be a staking entity. Okay, so that gets us to the second, which is we want to invest in moonshots. So far we've done 2. We will do more. Orbs and WorldCoin. We want to accelerate tokenization products. We want to work with the L2s and the DeFis, the leading projects, including something like Lighter. And I'm going to have a fireside chat with Vlad today about Lighter and why you really should pay attention to Lighter and its token. And we're really excited about this Beast Industries moonshot. Okay, but just to remind you, BitMine invested in 8Co $20 million. Okay, WorldCoin, it was founded in 2019 by Sam Altman, who's the OpenAI CEO, and Alex Blania. They have built an incredible technology for proof of human. It is the only way to verify your humanity today using an iris scan. They're not scanning your iris. They're using your iris to create a cryptographic hash, but that is unique. Out of 7 billion people, that would be the only number cryptographically unique identification. It's the only thing more secure is a fingerprint. And 8Co's done well. They hold 10% of the circulating supply of WorldCoin, 11,000 ETH, 69 million cash, and they verified 17 million humans. The WorldCoin app, if you haven't downloaded it, it's almost an Omni app. It's that good. And they've done some cool pilot partnerships to do proof of human verification, sort of a single sign-on with Kraken and Coinbase. And they've also made strategic investments into something like Mythical. Okay. And of course, tokenization is the future. And that's why we want to do moonshots.
So, a couple things here. They believe that they can generate about $400 million a year in profit just from staking their ETH, but that they're only going to earn 4 to 5% from which that they will pay out a dividend. The 4 or 5% that they earn in gas fees isn't even going to outpace inflation. So I have some questions here. If you are a shareholder, would there not be a better and a superior place where you should invest those assets? If not, why not just buy treasuries? Oh, it's because you believe in their venture capital arm or the investments that they're making into coins like WorldCoin or ORBS, the only proof of human technology out there in the world. They're going to scan your eyeball and your retina and allow you to check in at places where you don't want your privacy revealed. Seems like something that you should invest in. Do you believe in Tom Lee as a venture capital investor or not? If you do, then I would invest wholeheartedly. But that's a risky game. A lot of bets are going to go to zero, and you can best believe that if there's a possibility of more fraud, there will be more fraud. We've seen this play out in the crypto industry and the crypto casinos for the last 5 years. The real thing that you're investing in really isn't Tom Lee or BMNR or MSTR or Michael Saylor. It's really about, do you believe in Bitcoin long-term or Ethereum long-term? Digital credit, digital gold in the era of scarcity and abundance, or digital tokenization? What do you think is a bigger market? Stores of value of wealth all across the world, or improving the flows and taking a piece of payment networks and tokenizing the economy? Do you believe that Bitcoin is going to have a fixed supply of 21 million or not? Or do you believe in Vitalik, who says that they just solved the hardest computer problem in the world, the blockchain trilemma? It says you can only solve for scalability, security, and decentralization, but you can only pick 2 out of the 3. Well, he believes that somehow ETH is going to be able to solve all 3, despite what people have been working on for the past 60 years. ZK, EVMs, and Pure DAS is going to be the way that you can transfer data and have offline transactions. It's going to make ETH fundamentally new. Before we go any further and I give my real thoughts and my real verdict on what you should be thinking about when you're thinking about these 2 sorts of investments, well, we're going to go thank our sponsors first. Ledn has been the leader in Bitcoin-backed loans since 2018, issuing over $10 billion worth of loans, which are backed 2-to-1 versus the fiat that they're delivered in. Meaning, if you want a $1,000 loan in fiat and you don't want to sell your Bitcoin, well, you post $2,000 in Bitcoin collateral. The Bitcoin ends up in cold storage in a wallet address that you can see, and they've never lost a single sat or cent of customer money. And the fiat, it gets into your account in less than 6 hours. You can pay it off anytime without any fees. There's no credit checks, and it's about half as much as you would pay if you were getting a credit card. So if you're not going to sell your Bitcoin and you don't want to go into debt or be in the credit game, then why not borrow 2-to-1 if you're going to be responsible and pay it off anyway? Ledn's a great product if that's for you. Loans start at just 12.4%, about half of what you could get for a credit card, or you can get 0.25% off your first loan by going to learn.ledn.ao/simply. Let's get back to our show. Sometimes when we talk about what you should do, sometimes it's better to watch what people actually do versus what they say and what they promote online. And did you know Jimmy Donaldson, or MrBeast, was a Bitcoiner before anything else?
Someone broke in and stole all my clothes. He also took my Bitcoin at the time too, but he's a idiot. So I had like a laptop like this, and like right here was just written my private key. I don't know, my fucking moron. It just said Bitcoin private key. It's like, and I go in there, I can't find my laptop. I'm like, God damn it. They just stole everything I own. And then I just run over to my desktop, which they didn't steal, but my laptop. I pull my private key up there, and I'm like crying. I'm like, it's not going to be there. It literally says Bitcoin private key on my laptop he stole. And I'm like, dude, they just took it. There was like $2 million, which was every dollar to my name at that point. Because I like took like a couple, like $100,000 one month, put in Bitcoin like skyrocketed. Yeah. And I was literally just about to sell it and fund a bunch of videos. And I'm like crying as I'm loading it up and my heart is pounding. I'm like, please, it's there. It's all there. And I moved it real quick. And like that robber's like, he's busy stealing my TV, my blanket, instead of the Bitcoin that was sitting right there. Idiot. You.
But unlike Jimmy Donaldson, you need to learn how to protect your Bitcoin by not writing your Bitcoin private key on the front of your computer. Work with the team and the experts at thebitcoinway.com. They'll walk you through exactly how not to lose $2 million worth of your Bitcoin like Jimmy Donaldson almost did when his apartment was broken into. Schedule a free 30-minute consultation with the team at thebitcoinway.com/simplybitcoin. And don't write your private keys on the front of your computer. All right, so here's my real thoughts on whether you should invest into BMNR or MSTR. And I don't think it's fundamentally about those 2 things at all. Also, I don't think that you're investing in Michael Saylor in the long term or Tom Lee. These are just people who are able to educate investors to get new investors in cheap dollars because they're so good at what they do. Both of them are persuasive. Both of them are really intelligent, super brilliant guys who have been through the markets and seen the ups and downs and the new waves of innovation and technology. I think it's a wash on both sides. I do think Michael Saylor might have a little edge in terms of competency and skill set versus Tom Lee, but they're both phenomenal. So that's not really what you're investing in. What you're really investing in is, do I believe in ETH long term or do I believe in Bitcoin long term? One of the things that I think that you should be thinking about in the age of AI, when computers are able to replicate code in digital ones and zeros at infinite scale, especially as we find new sources of energy, it's not about abundance. It's about, can I invest in the things that are actually scarce, that are truly scarce? And this is the conversation that Jordy Visser and Pomp had last week, which I think is phenomenal. And I think it's the fundamental question that you should be asking when you think about BMNR versus MSTR or Bitcoin versus Ethereum.
Where we're going to have deflation is in coding related things. The one thing Elon Musk also says is, I got to write again for the second time. We're running into constraints in the physical world. The problem is the energy sector is 3% of the S&P 500. The materials sector, I think, is 1 and change, maybe 2. Combined, they're 5. The tech sector, when you take out the consumer, just like Amazon and stuff like this, it's like 50. Mm-hmm. So maybe we'll have deflation affecting the 50% that's built on code, but the other 5% that's based on true supply and demand scarcity will actually go higher. We are entering a world when he talks about abundance, you want to be long scarcity. You want to be absolutely long scarcity because abundance is a dangerous thing for code.
Because basically the argument you're making is things that are abundant are not valuable usually. And the scarcity of Bitcoin, even if there's deflation, the scarcity of Bitcoin is the like black hole that sucks all this capital in and can kind of protect it in a way that it can't be protected anywhere else.
Yeah. One thing about Elon Musk that's very interesting. If you ask him, and he's been asked this on Moonshots and other places, what do you think about money? He's perplexed. He's like, I don't know how money fits into the equation. Mm-hmm. And I believe money fits in from the sapiens perspective, which is we actually need transactions to happen. It's going to take us a long time to get off of that. So even if I'm right that fiat assets basically stop going higher and they kind of go sideways and that money starts rotating and chasing into something that has scarcity. So Bitcoin is more related now to copper, silver, gold. Everyone always thought of it that way. But I think this is now about scarcity. So I believe this is the year that abundance becomes an investable theme on the short side for the Mag 7, for software companies, for all of this stuff. And the things that start to become investments are the ones that are scarce, that are very difficult to make abundant. You cannot flip a switch and make copper abundant. And he's the first person to admit it. He said that in the exact same episode.
So a couple different questions that come out of here for me. When you think about what's actually scarce in the world, is Ethereum actually scarce? So they were able to acquire so much of the scarce asset and network, almost 5% of it, in 7 months. But do you think that 5% is going to continue to be 5%? Or do you think that they're going to continue to print more tokens? In a proof of stake security model, there's no one to say that they can't create more tokens and issue more things, especially as more people begin to use it. As MrBeast drives 1 billion users onto the platform, well, gas fees are going to go up. And when gas fees go up, in order to keep the prices low for Jamie Dimon and everyone else building privatized blockchains and their own financial tools, well, they're going to have to print more tokens and allow people to issue more tokens. And so that's a question that I have. Speaking of Jamie Dimon and these people on Wall Street, when these private blockchains are created, do you think that they're going to be sharing all of the validator fees and the gas fees with everyone in the entire network because they just care about them from the bottom of their heart? Well, no, that's not how the system works. In a more centralized system, well, you have the ability to choose the winners and not. With Bitcoin, it's a completely randomized process. People with solo miners in their homes are winning full blocks. And that's because no person is choosing who's the winner and who isn't. That's the difference between proof of work and proof of stake. And so when Michael Saylor and their team own 3.2% of the Bitcoin network, well, do you believe that that's going to go down over time? Well, I don't think that they're creating more coins. As a matter of fact, I think more people are losing their coins than finding new coins. So what that means is their percentage of ownership of this digitally scarce network is going to go up over time. I think that's a more valuable asset. Will the number of dollars increase more than the supply of Bitcoin? Yes. Will the number of dollars increase more than the tokens created on these digitalized platforms? I don't know. Nobody knows. But what we do know over the past 5 years is that people are going to create tokens for everything. When Beast Coin comes out, just like every other coin that's been created, what is to say who got the coins first? What's the pre-mine? Are they going to dump it on you? Is it actually going to be used and able to be used at a restaurant or somewhere else in the world with real value and real utility? Or is it going to be privatized to this closed garden and closed network? In the long term, I'm thinking that MSTR is going to be the winner over BMNR. And not because of what's happening in finance and the Market Structure Alliance bill and what's going on in crypto, but because I fundamentally believe in Bitcoin more than ETH over the next decade. Tom Lee says it's going to be the big macro trade of the next decade. I think $100 trillion flowing into a digital credit network with credit-worthy instruments like Bitcoin is going to win bigger than that because that's what the world is used to. We don't need another token. We don't need another blockchain. They already have these systems that happen behind closed doors and closed walls, and they're not sharing the profits with you and me. And getting a dividend from a 4 to 5% stake when the inflation rate is 5% doesn't do anything. I need 9%. I need 10%. I need a hurdle rate higher than the rate of inflation or my expenses are growing. So those are my thoughts, and that's my real thoughts and concerns. One of the ways you can continue to grow in your journey is by not just buying Bitcoin, spot Bitcoin on exchanges, or buying credit instruments or stocks like MSTR, STRC. You can get actual Bitcoin through Bitcoin mining, and you can depreciate the full amount of Bitcoin mining against your capital gains or other things that you might have in that year, making it a fantastic tool to build in an optimal tax optimized portfolio. Talk to an accountant or an advisor to do that. One of the ways you can do that is by not owning these machines on your own, but working with a company like SAS Mining. SAS Mining is 100% aligned with Bitcoiner values. They have 100% clean renewable energy sources and no markups, no contracts, no middlemen, no people blocking you from sats flowing straight to your wallet. They maintain the machines, they maintain the uptime, they do the fixes on your machines. You just get sats. Use the QR code to get started with SAS Mining today. Thank you for rocking with me today. Those are my real thoughts on the MSTR versus BMNR debate. This is Dante Cook with Bitcoin Simply. Happy stacking.